everyone. I'm your host, Rifilwe, and welcome to this episode of 9 Yards TV, brought to you by Old Mutual Corporate. We're kicking off this series asking the question that every entrepreneur has to ask at some point in their business journey: what to do about funding? You need money to make money. Whether you're borrowing from family and friends or getting financial support from your investor, you will know that at some point you need to have the talk in any small business about finance. So let's have that conversation. I'm joined this morning by our entrepreneur Zamokuhle Thwala. He is the CEO of AgriKool Finance, coming to us live from KZN, and our expert Tafadzwa Madavo, who happens to be the CEO of Riversands Incubation Hub, a large-scale incubator that provides a range of services to entrepreneurs. And like so many entrepreneurs, we're meeting over a coffee, and these days also over a virtual call. Hello, gents. Zamokuhle, let's kick off with your business and your elevator pitch. What exactly does AgriKool do?
Thank you so much, Rafila. AgriKool is a platform that connects farmers with buyers to a fair and reliable market. We then provide farmers with agronomy support and also help them with access to finance.
All right, so when you bring them onto your platform in terms of funding, what are some of the challenges that some of the small agribusinesses that come to you have faced?
Well, most of our farmers are obviously black farmers and which are underserved. So because there's a lack of credit history and because they do not have collateral, so they cannot have access to finance from your conventional banks. And because of that, they're not able to invest heavily in their businesses and they're not able to grow and produce because, farming by nature is an economies of scale game. So you need to produce more so you can start make some good profit margins.
So when you look at it across the South African landscape, then what are some of the areas of support, financial support we might be able to get for small businesses in general?
Looking at grant funding. Especially for those in social entrepreneurship, we've seen a lot of corporates investing with ESD to try and help small businesses. So especially for social entrepreneurship, also government.
There's a lot of jargon in there, which I imagine for the average agri-business owner, that's a little bit complex. What do you wish your businesses knew about funding when they kicked off their small business?
I wish we knew the risk as well, because you need to do. We've lost a lot of money. There was a lot of bad debts that you have done in the past. And also there are a lot of things that we underestimated, like your cost to serve that debts, because you need to call people to follow up on them. And by nature, farming is a high-risk business, so you should find a number of ways of making sure that you still get that money back. I think we understood more the agri side and underestimated the finance.
Well, Tafadzwa, then that's a great time to bring you in because that's exactly your expertise. When you're hearing what Zamokuhle has to say about the challenges that he faces, do these sound familiar to some of the businesses that you've brought in?
To be honest, a lot of the time, the challenges are very common across the board. They're universally applicable. The one factor that I feel strongly about is that there isn't a deep understanding when it comes to the numbers within the business, but also on the other end, in terms of those who are funding, not trying to figure out a way of making it simpler for the business owners to apply for the funding, right? So I think it's a two-pronged challenge, and I think there's a need for us to look at a way of finding a balance between the two.
This is always the challenge with entrepreneurs, isn't it? You need to be an expert in the business that you're in and also an expert in finance. What are the top 3 mistakes that you see when entrepreneurs come to you?
They always seem to request for a very large sum of money that they can't necessarily justify, right? It also comes from a business valuation perspective, where a lot of the time, especially when it comes to equity funding, they're valuing their business up millions upon millions. And you ask them, okay, on what basis did you actually do that valuation? Or on what basis are you asking and requesting this funding? So I think the biggest thing is, first off, request a relatively small amount and build a relationship. The second thing is personally understanding the financials. So yes, you're getting someone else doing your books, an accountant or someone else, but you need to personally understand the numbers and be able to articulate those numbers when you're actually applying. And then thirdly, it's put yourself in the funder's context. So ask yourself, what are these criteria? Why are they asking this information? And be able to then put your application taking into consideration the context of the funder, because they're looking at it from a growth perspective, a return perspective, and from a risk perspective.
So a reasonable amount, understand the numbers, and be objective when you look at your business. Some of us find that, or some entrepreneurs find that giving up that kind of equity or getting an investor on board can do quite badly for the entrepreneur themselves. How do you allow them to protect themselves from that risk?
I think the obvious thing is from the onset, yes, when you're an entrepreneur and you get an opportunity to get an investor, you get excited, right? Because it's money. But I think it's important for you to scrutinize the terms and conditions So you don't want to have a situation where you're not able to meet the expectation or where there's no clarity when it comes to the role that each particular investor is going to play.
Then, Tafadzwa, it's important for us to know the timing. When is the ideal time to seek funding?
I don't think there's necessarily an ideal time, right? Because the businesses get funding depending on their business model and whether they're looking at a disruptive business model with exponential growth. I think it's more got to do with the fact that it's a lot easier to get funding when you have built some form of traction and you can prove as to what is going to likely happen within your business.
Zamokuhle, you're nodding a great deal.
Well, I could have not said it better myself. Generally, in the ecosystem, in the startup ecosystem, there's a lot of hype around raising funding. You find someone who hasn't even made one sale talking about raising funding. I mean, that's not really going to work. And I think we get deceived a lot by the shows that we see on television, like your pitch and what's what. So you see guys pitching and say, I'm in, then you get money. I mean, in reality, that's not the case. I mean, we started what you're doing at AgriKool since 2018. And at the early stages, we also made that mistake of chasing investors with very little, almost to no traction. I've realized in the journey is that don't chase investors, create value, and that value is traction, and investor will chase you in.
It looks as though, Tafadzwa, as an incubator, you're very impressed by what you're hearing from Zamokuhle. What are your top 5 tips for entrepreneurs?
I think for me, the first thing is start keeping credible financial records now. Secondly, start applying for a relatively small amount. Don't go big, especially in the beginning. The third thing would be understand the funder's context. You have to realize, especially when it comes to government funding or grant, they're receiving a massive amount of applications. So it's important for you to put yourself in their shoes because they are unlikely to actually take on your application if it's not clear and straightforward. Try to link everything in the application to the numbers. I think that's the key thing. And then I think the fifth thing is learn from the declines. The most important thing is that you have to realize funding is a journey, right? You're probably going to get declined the first time around that you apply. But learn and ask yourself, why did I get declined? And then be able to improve your applications over time.
Well, I really love how much your businesses actually emphasize that old African adage. If you want to go fast, go alone. If you want to go far, we go together. We're going to leave it there, gentlemen. Thank you so much for your time today. Zamokuhle Thwala, the co-founder of AgriKool Finance, thank you for your time. And of course, Tafadzwa Madavo, thank you as well, CEO of Riversands Incubation Hub.
Yeah, thank you for having me.
Thank you so much.
Well, that's it for this episode of 9 Yards TV, brought to you by Old Mutual Corporate, helping entrepreneurs to go the distance. Be sure to like and subscribe to catch our other episodes giving small business advice. But for now, see you soon.
Need funding to grow your business? SME Go helps you to reach several funders with one application. Find out more at smego.co.za.